I'm 𝗪𝗲𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂𝗂 Services. It's a great pleasure to welcome you, either here in this wonderful auditorium or via the webinar, for those of you online, to this great event organized by the Luxembourg Capital Market Association. The conference today will focus on one of the hottest topics, I would say, in the industry, which is the potential for digitalization of the traditional market. More specifically, the scope of the discussion this morning will be about the use of the DLT technology in the context of debt issuances in Luxembourg. To explore this topic, LuxCMA has built quite a fascinating agenda, with first the presentation of a theoretical proof of concept on which the LuxCMA Infrastructure Working Group has been working over the past few months, and which concentrate on how DLT can be leveraged to support debt issuances in Luxembourg. And then with a second panel with a market players roundtable where representatives from issuers, banks, or market infrastructure will share their perspective and their view on the adoption of the DLT technology in the debt capital market. Digital is one of the strategic pillars for the BNP Paribas Group and for BNP Paribas Securities Services. And given that Luxembourg is a key location for our issuer services activity, it was really important for us to participate to the task force which has been initiated by LuxCMA, and we are delighted actually to collaborate with other key local industry participants on this proof of concept. And I can even say now that we are even more delighted to welcome you all here to share the highlights and exchange on this particular proof of concept. Now, before I pass the floor to Julie Becker for the opening remark and to go really into the nitty-gritty of the topic, because I guess you are all here for that, I just wanted to take the opportunity to thank the LuxCMA team, and particularly Joanna Casoli here in the room, and our marketing team from BNP Paribas Securities Services Luxembourg, with Cindy Crucifix, who is also in the room, sorry, just to thank them again for coordinating and setting up the event. So please enjoy the conference, and for those of you here, I invite you to stay with us for the networking cocktail, which will take place at the end of the event. Enjoy, and Julie, the floor is yours.
Thank you very much, Laurent and BP2S, for hosting this event today. Ladies and gentlemen, as chairwoman of the Luxembourg Capital Market Association, it's my great pleasure to be with you today to discuss a topic which is set to become a key driver of change in our industry in the coming years. Digitalization is taking all industries by storm, and our industry is no exception. As more and more industries kickstart or accelerate their digital transformation, a growing number of financial institutions are looking to capitalize on new technology to enhance their business processes and their business services. And this is much more than offering a digital alternative to manual tasks, of course. Today, we will take a deep dive into DLT and showcase how this technology has the potential to shape the future of our industry. And the momentum is here. Investors are very much interested, and institutional professionals are very much preparing, as you will see later on today. According to the 2021 Institutional Investor Digital Asset Survey led by Fidelity last year, 84% of European and US investors would be interested in institutional investment products that hold digital assets, with even 8 out of 10 investors even stating that digital assets have a place in a portfolio. The growing interest in DLT is also reflected here in Luxembourg. In February, PwC Luxembourg, together with the Loft, the Luxembourg House of FinTech, in close cooperation with 𝗟𝘂𝗅𝗍, the Association of the Luxembourg Fund Industry, published the first market survey of Luxembourg's crypto assets industry. And the reports highlight the driver of growth, the opportunities, and the challenges facing Luxembourg market participants considering capitalizing on this new asset class. As some of you certainly expected, the results of the survey suggest that there's a healthy mix of pragmatism and enthusiasm around crypto assets in Luxembourg Financial Center. And still, 61% of the respondents are either already considering crypto assets as a strategic priority, or if not, expect crypto assets to become a strategic priority within the next 2 years. This is clearly significant. In terms of next steps, PwC, Loft, and 𝗟𝘂𝗅𝗍 together recommend to focus on 3 areas. First, fostering ongoing dialogue between market participants. Second, enhancing coordination and cohesion between stakeholders. And third, strengthening financial literacy. These recommendations, or rather priorities, are valid well beyond the crypto asset sphere and can also be applied, of course, to the DLT debt issuance, which is the topic of the conference today. Of course, it's only in its early stages, but the use of distributed ledger technology is gathering increasing interest in financial markets. It represents a very important step towards the digitalization and modernization of products, processes, and services, and it has clearly the potential to help create a more open and accessible financial system. DLT can enhance the structuring, the issuance, and processing of traditional financial instruments such as securities. Native security tokens issued using DLT bear the promise of a fully digital life cycle from issuance until final maturity. Due to their innovative characteristics, securities tokens have the potential to improve efficiency and transparency at each and every step of the process, to bring investors and issuers more closer together, to make transactions safer and more resilient, while shortening the settlement cycle. So as LuxCMA members, how can we work together to mainstream DLT debt issuance? As a leading jurisdiction for debt capital markets, and as a key financial center in Europe, Luxembourg holds a unique position. It offers a complete ecosystem that covers all aspects of the value chain, as represented in the broad membership of LuxCMA. We are therefore very well positioned, both as a country and as an industry, to play a leading role in the adoption of this technology in capital markets. And some important steps, as you may know, have already been taken, not only at the regulatory front, but also if we look at markets and infrastructures. First, on the regulatory front, what did we do in Luxembourg? Luxembourg started as early as in 2019 to amend its security laws to encompass DLT. Last year, the country adapted its 2013 law to allow the issuance of dematerialized securities on a DLT infrastructure, providing a legal framework based on innovation. And this helps pave the way for the issuance of securities using DLT. In January, the CSSF, our national regulator, provided useful guidance on virtual assets in the form of a frequently asked question. And additional advice on DLT-related projects was also provided by the CSSF through a white paper focusing on the various developments of blockchain developments and risks and consideration to be taken into consideration by market participants. Second, if we look at markets and infrastructures beyond regulatory steps, there have also been some interesting development in the market in Luxembourg over the past 12 months. If I take them in the chronological order, EIB issued its inaugural DLT bond issuance in April 2021. A €100 million 2-year bond, which was the first multi-dealer-led primary issuance of digitally native tokens placed with several institutional investors. Two months later, in June, BIL and LuxCSD announced the successful completion of a test trade in traditional securities involving settlement in CBDC, in central bank digital currency. In July 2021, Funds DLT went live with its DLT fund distribution platform a few weeks after the granting of the necessary regulatory approvals, with Luxembourg-based asset manager Azimut Investments as first client onboarded. Finally, since January this year, 3 months ago, the Luxembourg Stock Exchange, that I'm also heading, admits financial instruments issued on a public DLT on its securities official list. This constitutes a very important contribution towards price discovery and transparency of financial instruments issued using DLT. As importantly, it also helps position Luxembourg as a pioneer in the DLT space, given that LuxSC is the first exchange in the EU to offer a publicly accessible solution for issuers of that type of instruments. I couldn't close my welcoming remarks without mentioning the pilot regime. The pilot regime for market infrastructure based on DLT was recently approved by the EU Parliament. It's expected to enter into force in the coming months, early next year, and will last between 3 to 6 years. It will allow the processing of security tokens through market infrastructure in compatibility with all EU regulations. The pilot regime will mark a significant step in the EU's ambition to prepare capital markets for a digital future. It's a way in which the EU can support digital innovation and strengthen investor protection while also ensuring financial stability. And at LuxCMA, we welcome the efforts made by the EU and local authorities to clarify rules and establish a framework allowing our industry to leverage DLT. As you know, and that's the reason why you're here today, LuxCMA is also actively addressing the topic, and today's event is one example of this. And I'd like to take this opportunity to commend the LuxCMA Infrastructure Working Group for its excellent work over the last 12 months to debate and document the proof of concept which will be presented today, which is about how our industry can leverage DLT technology to facilitate the issuance and servicing of debt securities in public capital markets. We are very pleased to share with you these insights with you today ahead of the publication of the document later on. And now it's time for me to conclude. After the presentation of the proof of concept, you will hear industry experts share their views on the current state of play and what we expect to see in a not too distant future. I hope, and I'm sure, you're as impatient as I am to learn more about DLT and how DLT can change capital markets for the better. On behalf of LuxCMA, thank you once again and for joining us this morning. We wish you an insightful and enjoyable conference. Thank you very much.
Okay, so I have the pleasure to basically be with you all today in order to present this proof of concept that was alluded to by Julie. So the reason why we're here today is to really present what we've been up to as the DLT task force that is part of the Luxembourg Capital Markets Infrastructure Group. The infrastructure group is actually set up of a bunch of market players that are very active in Luxembourg, and as representatives of this working group, we have the pleasure here to have 𝗟𝘂𝘅𝗖𝗠𝗔, which represents the Luxembourg Stock Exchange. We have Juliette Nguyen representing BP2S, so this is the issuer agent, paying agent side. and 𝗟𝘂𝘅𝗂𝗃𝗃𝗲 or ● that represents the LuxCSD, so sort of the CSD environment. So as part of the working group, what we did actually last year is to already publish a capital markets landscape that really look into basically how a regular bond is issued. And there we highlighted sort of what can happen and what can be improved. And as part of these discussions, we said, well, hold on a minute, there's something bigger that we should also be looking at. And this is DLT, because we really believe that this has the potential to truly revolutionize the way that bonds are issued, transferred, settled, and custody today. So this is really what has brought this amount of work over the last 12 months in order to build on this proof of concept and to give basically some ideas for issuers and market infrastructure players as to how to structure such a deal and how to accompany either your clients or being your issuer or a specific market infrastructure player looking into this. So this proof of concept is by no means, as we'll call it, the golden source of truth. This is really sort of a key indication of how a potential bond issuance could take place. So by all means, this is really sort of different steps that can be thought of in order to do this, but this is not said to be that this is the only way to structure such a deal in Luxembourg. So as Julie alluded to, this paper is not basically sitting in a vacuum. So this is also part of different regulatory initiatives and different tech initiatives. So as was said, there's the EU pilot regime and there's MICA. So those are the two big, broad EU proposals in order to regulate sort of the space. Today, we really won't be touching on MICA because this is about crypto assets that are outside of the traditional MiFID sort of regulatory environment. But what we're talking about today is a standard DLT debt instrument being issued that would seek to fall actually within the realm of traditional regulations like MiFID and the EU pilot regime. So what do we mean by DLT? So this is really here what we're going to be talking about would be a private permission blockchain that is basically being hosted by a private permission DLT platform. This is how the capital market landscape looks today without the DLT adoption. So as you see, this is really a lot of different players acting in a vacuum and in different silos, actually, with each specific roles in each a different life cycle flow. And we think this could actually be bettered in order to benefit investor protection, in order to have more efficiency, in order to have more speed, and out of all, in order to share information, in order to leverage as much as possible the DLT source of truth. Today, again, what we're really going to be talking about is security tokens that are and that represent DLT transferable securities. So we're not talking about currency tokens like Bitcoin, e-money tokens, asset reference tokens, or utility tokens. So when we talk about security tokens, it's really about DLT transferable securities. So the reason why we have this wonderful panel here today, it's really all about the different life cycle events. So here we have the issuance, trade, post-trade, and asset servicing. So Arnaud is going to talk to you today a little bit about how an MTF could happen on the trade cycle and be deployed on the DLT platform. Juliette will take us through specific steps that the issuer and paying agent can interact within the DLT platform. And Daphne will also talk about the post-trade and the asset servicing steps that will be deployed by having a CSD acting on-chain. So this is a key part of this presentation today, is also to say that we're setting up an infrastructure that relies on legacy players. So this is quite bold, I think, as a statement, because when people talk about DLT, the imagination really steers you in a way to say, well, this is going to be a world where it's completely disintermediated, where we're going to have the issuer interacting directly with the investor. But here at LuxCMA, we really take the view that actually there is an intermediate step to this, and it's still to have one platform where a lot of market players rely on a specific set of information, but for which we will have the legacy players that still have a role to play. And this has to do with different liability and responsibility points for the issuer or the investors to actually, to know who to look to in case of specific issues. So as the scope of this specific paper, we had to make a specific number of assumptions. So we decided to take a regular security token that is structured as a debt instrument issued by a Luxembourg corporate. The bond will be Luxembourg law governed. We also decided to say, well, actually, we're going to look at a private placement, non-syndicated, and this paper really focuses on the life cycle of this specific instrument. So here we're really going to cover the numbering and issuance process, the issuer-agent process, the trade, and then the post-trade. So those are all the different things that are going to be put in this proof of concept paper. What we're, however, not covering is what happens pre-trade, so the origination, the rating, and the placement. And I think a lot of you will say, well, actually, this is an easy way out, but we decided to leave a lot of tech functions outside of the POC. For the simple reason to say that actually there are a number of ways that such an issuance could be done in today's environment. So either we could have picked, completely permissionless DLT environment, let's say like Ethereum mainnet. We could have picked as well, a private permissioned subset of the Ethereum mainnet, etc. But we felt that within today's regulatory environment, what has been proposed by the EU pilot regime, what is also being proposed by the Luxembourg legal framework, the safest bet in order to really have a functioning concept is really to say that we're just going to pick a private permission DLT platform that is operated by one entity and on which these different market players have a node on. So these are going to be the specific points that we're going to be touching on today. And in order for you to really, for us to all speak the same language together, we're going to be talking about golden records, nodes, issuance tokens, wallets, security tokens, and cash tokens. So the golden record with a specific icon is set to denote the fact that we're all all the market infrastructure players and the issuer and the investors that are plugged into the DLT platform will share the same data set. In terms of the node, so those are the specific entities that interact with the DLT platform. The issuance token is actually what denotes the specific issuance of the debt instruments. So that has to do with the Luxembourg legal framework, but we'll discuss about that with Daphne. A wallet is akin to a securities account within the current Luxembourg legal framework, and we'll touch upon that with Juliette. And the security token, well, that's the DLT transferable security that actually transits through the issuer agent to the, obviously, issuer, to the investors, and the SSS, so the security settlement service, etc. And the cash token represents the cash leg. And here we also, in the POC, as you'll see when this comes out, we're going to have really scenarios where cash would be on-chain and a scenario where cash is off-chain. And again, this is for the purpose of showing basically our community that there's different ways to structure such a deal. So not everything has to be on-chain, but we can have on-chain and off-chain settlements. And I think there's also key points to say, well, the notary function and the central maintenance functions that are traditionally services provided by a CSD are definitely operated on-chain and within the existing Luxembourg and EU legal framework. Although really mentioned the EU pilot regime, here we really inspired ourselves with the potentiality of the pilot regime, but this POC, and I think it's an important point to note, is really structured under the existing Luxembourg legal framework. So here we're not taking the bet or the view that this is really a DLT MTF or a DLT SSS. This is really sort of a market infrastructure that can be deployed today. And without further ado, now we're going to go to our Q&A session, and we're going to really go through each of these specific environments and explain why are all these different players basically being set up on the platform and how this all sets about that an issuance takes place. So for the first question, I'm going to ask Juliette to really explain to us, well, why do we need the issuer agent and the listing agent, and what role does it do and does it fulfill for the issuer that is looking to issue such a bond? You can just speak, I think it's...
Can you hear? No. So, about your question, let's say that the scope of this activity as listing agent and issuer agent remain unchanged. What I mean by remain unchanged, the fact is in order to secure the admission of the instrument to the trading, the listing agent will interact with the stock exchange, or in the case within this proof of concept, within the MTF. Meanwhile, the issuer agent interact with the CSD in order to initiate the issuing process and allow the settlement of the instrument. Finally, the objective of this activity is to help or assist the issuer to issue the transaction, to settle it, to list it, or generally speaking, to offer all kinds of services, which is related to the issuing process. The big change is obviously the technical infrastructure used. So, in addition, there is some type of complexity due to the absence, I would say, of interoperability between different systems with different concept of legal ownership. That's true. The idea of a full automized DLT environment might be aspirational, but we know that there is different available model enabling the issuance and post-trade handling of the security in this type of environment technology. So for the responsibility, and if there is a significant means today for change, we would say that for conventional system, it will be a big challenge about the interoperability.
This is perfect. So if I understand correctly, so therefore so the issuer and the listing agent really acts on behalf of the issuer in order to enable the issuance of the security token, correct?
Yes.
And there, are we expecting for the issuer and the listing agent to actually sort of code the smart contract on behalf of the issuer, or can this be done basically in different number of ways, or is this contractually arranged?
So about the code, we would say that the coding, this is not us, like the issuing agent who will code it. Okay, it's mainly major. This is within the DLT who will do it. Here, what is important to highlight, this is because we are interacting within the application layer. So we are all here representative. The objective is to facilitate the issuing. The issuance within it. So if we go to the slide regarding to the golden record, I think this is a good. Yes, here let's say that what is important here. We all know that there is like terms and conditions, and these terms and conditions. This is the way where we're gonna issue collect, I would say, all the information and through the DLT. So there, what is the important? This is all the tasks that we have done outside can be done also within the DLT. So here, the major points and the key points is the golden record. This will serve it.
Perfect. And so here talking and looking at this here, obviously the CSD has a strong role to play here. So definitely can you explain also how the CSD will function and operate in this?
I will jump into what you said. Indeed, you see on this slide all the different participants involved in the process of issuing a security. And it's indeed, I echo what Juliette said, that indeed we work closely together. So what that involves is, well, to create the golden record on the DLT platform. That's what we imagined. So if you look at the legacy system today, we communicate a lot by, there is also a communication and automation in the legacy systems. But what we do is communication on a bilateral basis often, and then duplicating that vis-à-vis different participants in the market. For instance, in my day-to-day, within CSD, I would communicate with colleagues on the issuer agent side. I would communicate with the issuer. I would communicate together with the agent, also with other law offices, etc. What the revolutionary idea is here is to say, okay, we can put all this information on a digital ledger, which is a decentralized way of structuring it from a technology perspective. And all the participants have at the same time access to the DLT platform and have access to this information. So what Juliette just said is that you start with the terms and conditions. I get them too in my day-to-day. Julie gets them in her day-to-day. The exchange gets them in the day-to-day. But like this, every party has access to this information at the same time through the DLT platform. So they have a node. So you see on the slide also that each party, you see the Lux exchange, you see the participants, so bank A, B, and C. You see the CSD having a node, and you etc. The issuer itself, the agents, and each can have information at the same time through this chain. So from that perspective, it's a whole new way of looking at communication and potentially also automation. Because you will see later on in the discussion that we will have that actually the security processing, so the settlement processing, will allow also via smart contracts to do a lot of interesting things from a technology perspective. I want to come back to a question you said before, namely, how would that be encoded? Of course, what we propose here is an example. Philippe also mentioned that in the introduction. We propose this as a way of working. It's not a blueprint of this is what it has to be. It can be like this. So any use case could use this as a proof of concept and work accordingly. Of course, the next step would be which protocol would I take? How would I encode it exactly? I'm not really a technology specialist, but I do know that there are various protocols. So likewise, to encode the information on a record on the DLT platform, that's not really how that works exactly technologically is not really the scope of our discussion. Mm-hmm. The discussion is how it would work. And now to come back to the initial question, sorry, is that the CSD has here the role, and we took the role that we play in the legacy system in the current regulatory environment. So we have CSDR, we have the different blockchain acts, and there we imagined that the CSD would have the same roles as it has today. Now for this slide, we would validate through the node the different information, like today as well. We validate the documents. It's very important. It's a governing document of the issuance process. And while the draft through step 1, 2, and 3 is being validated, there will be a role for the CSD, likewise also for the exchange. The MTF would validate the information, the agent would have his say, and each party, through its node, will give a sign to the DLT platform, okay, green light, and it will move on to the next stage until at the end of the process flow where we're talking about the creation of the golden record, the CSD in this case would have like the in its notary function, in my idea, have the final like stamp on it, if you like, but then digitally in a DLT environment of saying this is the golden record, this is what we all use for the further processing. And this information will also include information on the coupon date, the final maturity of the bond, etc. So to sum up, if I may, is that we all have a node, all the participants, not only the CSD, but the investors potentially, or the custodians. Also the numbering agent, I forgot to mention that one. You have the exchange, and each of us would do their thing as they do today, but in a more efficient and digitally differently designed as opposed to what to do with today.
And before we move on and ask Arnaud a bit how the trading takes place, so here, Daphne, I think there's an important point to mention is that the CSD, so here we talked about the settlement, the notary function, but the central maintenance function. And as well, so here I see bank A, B, and C that each have a wallet on-chain. So therefore, can we deem that actually the CSD would take these three banks as participants in their systems, right? So the CSD would act akin to an account keeper, keeping these specific accounts.
Yes, so I wasn't sure if we would jump afterwards to a next slide. So indeed, that is something to be mentioned.
Yeah.
So I mentioned now rather the notary function. So like part of this is today in the vault of, if we talk about LuxCSD,
that's right,
LuxCSD vault operator. So the central maintenance function is indeed defined also in CSDR as the role where the CSD is making sure that the issuance outstanding amount at all times is the same and not more and not less than what all the banks, custodians hold in the security. So if I issue 100 million in a debt instrument, it's always the same as the issuance outstanding amount. Now, it does not require, from a DLT perspective, the bank or the custodian necessary to have an account via the node of LuxCSD or the CSD. It's actually CSD neutral. So you would see here as well that here we depict Bank F and Bank E. They are accessing the DLT for reason XYZ. They are technologically not yet equipped in this idea to have direct access through a node on the DLT platform. Bank D and Bank A, B, and C they have their own node. Technically, the CSD is able to do the reconciliation for all these banks, regardless of whether they have an account in the books of LuxCSD or the CSD, or directly at the node. This is done via the so-called issuance token, which is a non-fungible token, which is compared electronically at all times versus the security token.
But that's not the security token itself, so it's
exactly.
So that's not the DLT transferable security.
Tokens are fungible and are different electronic tokens. And the issuance token is a token which is representing the issuance outstanding amount, equivalent to what we have in legacy systems, the issuance account at the CSD.
So that's a true use of tech in order to fulfill, let's say, an existing framework. Okay, wonderful. And so, Arnaud, now that we see here that we have the MTF and the matching engine, and then once the securities have been created and existing, etc., so where does the MTF come in? So how does the MTF, does it operate on-chain or off-chain? Is the matching engines, are the trades being done there? I had mentioned that although the pilot regime really discusses about a DLT MTF, that here we're having more of a traditional MTF interacting with this DLT platform. So could you maybe take us a little bit what your future job will look like?
Sure, thank you. One important clarification first to make sure that our audience follows us. We'll leave aside all the primary market trading. So all origination, placement activities is really taking place off-chain. At least that's one of the assumptions we've used from the very start. Now, there's no easy answer actually to your question. It may sound relatively trivial, but there's no easy answer. Probably the way we look at it is it's not an all or nothing type of solutions. The reality is probably it's going to be an evolutive journey with a gradual adoption of the DLT technology for MTFs as the market grows in terms of comfort and expertise with the technology, but also as the technology also improves and meet the kind of standards we need for public markets to operate orderly. So for the sake of this proof of concept, indeed, we've assumed that trading, matching and trading actually would continue to take place off-chain on the legacy MTF, leveraging the connections that trading counterparties have with this infrastructure. And we've done that for efficiency reasons. Indeed, operating a regulated market or operating an MTF today comes with very stringent requirements, technical, legal requirements with very high levels of control that needs to be applied. And there is still some uncertainty about I would say the current state of the technology to actually meet those type of standards. So we thought it was a safer assumption to go for a trading off-chain. The second reason was also that those trading platforms, centralized trading platforms, have built today very important liquidity pools with direct connectivity established for the different market participants. So we thought, once again, it was easier to leverage those kind of existing connections to allow participation in the market. However, I think this doesn't mean that the MTF has no role to play on the DLT. To the contrary, I think Juliette mentioned that we can expect a number of benefits in terms of enhancing the admission process as it currently exists, right? Which involves lots of paper flying on a bilateral basis, as you mentioned, Daphne. Here we can expect that this, we can have the MTF working with the issuer and the listing agent from the golden record, extracting the necessary data to facilitate the admission process and also to facilitate the information dissemination process to the public, to the authorities, not only at issuance but also throughout the lifetime of the security to facilitate issuers meeting their obligations in terms of reporting and so on. So quite some benefits to be expected there. And another important point is that although the trading takes place in the legacy MTF, the MTF will be the one injecting basically the result of the trade into the DLT platform to allow the settlement to take place. So the DLT MTF is leveraging its direct its node basically to inject that kind of result. And if we try to project ourselves in the future, depending on how we want the trading and settlement steps to be integrated, there could also be additional functionalities for the MTFs, potentially going up to doing some security provision checks at the level of the DLT in order to allow trading to take place. So that would be, for instance, a possibility if we want to go towards instant settlement. And we'll be back to with that concept a little bit later. Yeah. Then in the second phase, of course, we can envision trading activity to move gradually and to start taking place on-chain using somewhat decentralized models like decentralized exchange or decentralized finance protocols. But today, those remain very highly experimental. So in summary, it's likely we see an evolution over time. Yeah. An evolution over time, and that we end up with a mixed picture, having trading taking place on-chain, off-chain, and not to forget OTC, which we've left aside also for the sake of this book, but which matters very much when it comes to fixed income markets. So definitely we don't expect OCT to disappear. To the contrary, and so the reality is that those different trading channels will all converge towards a kind of single DLT settlement layer. And I think there, if that is the end picture, we need to keep in mind the principle of interoperability and the principle of open market access, because otherwise we'll end up with a more fragmented environment than the one we have today. So very important points to keep in mind for the rest of the debate.
And I just want to jump back to a point that you made. So in terms of having, for example, here a specific trade that you can see on the slide between Bank B and Bank C. So here I just want to understand, how is the MTF leveraging the DLT platform in order, for example, to check that Bank B was the true proprietor of the security token being transferred? So is this because of the node that it has access to so that it can check this specific information? Is that instant, or does this still require a little bit of manual, let's say, reconciliation?
We can do what we want. I think, first of all, in this current phase, there's absolutely no obligation for the MTF to know who actually holds the security token. Today, exchange operate without having this kind of view on who sits on securities. And to an extent, it's good for the corporate bond markets, because we know that levels of liquidity are relatively low, and somehow work with this kind of intermediaries that provide liquidity by buying short and selling short and then recovering. So we need this kind of at least in this POC, we didn't really integrate this concept of security provision check. But as I said, as we move, and if we move towards a more integrated model, the kind of TSS model that is often referred to in the DLT pilot regime, yes, we could have the MTF making use of the records that are contained in the smart contract to pre-check that the security indeed sit in the wallet that is referred to in its own records. And we could consider having an action where the security are then blocked until trading takes place and settlement takes place immediately. So that would be a way to envision it, yeah.
And again, leveraging tech in order to...
Absolutely, yeah, absolutely.
So once a trade has actually taken place here, I'm pretty interested, Juliette, in truly understanding. So, okay, let's say now the bond has changed hand, etc. Now, it's this specific time of the month, the issuer has to actually do its coupon payments. So here, what differs from today's world to, well, tomorrow, or also today's world on the DLT platform? So here, what will the issuer agent do, and what will the paying agent do? So here, Juliette, you're wearing a bit two hats, sort of representing paying agent and issuer agent.
Yeah, somehow. So the question is how to interact on behalf of the...
Yeah, or how does it work versus today, for example?
Okay, so here we are, like always, facilitate the access to the issuer within the platform. The fact is, their role here for the agency services is to understand the market infrastructure, right? To advise the issuer in a certain degree, and to perform the listing and issuance as the case may be. So if we are in this actual setup of the infrastructure, somehow it should not really disturb like the issuer. However, if we are in a cash on-chain scenario, as here, for instance, at that moment, we are in a situation where the issuer has to maintain a cash wallet in the DLT. And the issuing agent would transfer the cash token toward the issuer, okay? So now it's more interesting, this is finally the interactions with other parties, thanks to the nodes as application layer. And I think somehow that we should also ensure that there is a kind of modus vivendi of each party to be sure that in the future, we already know that the engineering of such a platform has been established. The mechanic could be quite automatic and fast. So, in some way, yeah.
So you could, in the end, basically fulfill this in a more or less automatic way, but that ultimately will depend on the tech build, if I understand correctly.
Finally, I would say that it could be also like a transaction by itself
Yeah.
at the end.
And so there, do we actually see that the paying agent will be, let's say, responsible in order to provide the cash tokens for the issuer? So could it also act as sort of a cash token issuer, sort of tokenizing commercial bank money? Or
But potentially, it can be a new way or an additional features that can be embedded by the agency services on behalf of the issuer, of course.
Perfect. And so then, Daphne, so taking also what happens here in the different frameworks, could you also take us through, well, let's say now that the bond has lived its life, you know, it occurred, what happens at final maturity? How do we ensure that the bond sort of ceases to exist? How do you do redemption on chain?
Yeah.
Tricky.
If we we are making quite a jump, because we are going from coupon payment to the bond who is basically at the end of its life on the DLT platform. Part of the final maturity is also, first of all, a cash movement idea. So you have the final interest rate, if applicable, as well as the notional amount, which will be transferred back to Bank A and B in this case, because we imagined a trade between B and C. So in our example, everything is with A and B. So what you will do then is, once the cash has moved, either on-chain or off-chain, we have actually imagined two different types of possible scenarios, depending on the technological rule book that we would have built in this particular hypothetical case. Once this has been finalized electronically on the DLT platform, the actual tokens, like today, what would happen is a markdown in the books in the legacy system. This is translated in the DLT platform as a burning of the tokens. So basically the tokens, the security tokens, will be transferred back to the CSD. This can be automated by a smart contract, because the moment that this is happening is determined in the terms and conditions of the bond. So this can be automated. So it will move back to the CSD, and the CSD would then burn, if you like, hence a little fire there next to the tokens, would burn the actual security tokens as well as the issuing outstanding amount. But just for a summary, the issuing outstanding amount is recorded or reflected on the issuance token, which is a non-fungible token, whereas the security tokens itself, reflecting the amounts held by the different banks or custodians, those are fungible tokens. And because of the different elementary features in non-fungible, fungible, the CSD can do its work on the reconciliation side. So at the end, they burn the tokens, and that ends the life of our debt instrument.
Yeah. But so you also mentioned reconciliation, so that's also something that the CSD is enabled to do by matching sort of the issuance tokens, the specific amount of record that traditionally would sit on the securities issuance accounts, if we're using the dematerialized framework in Luxembourg, with the security tokens sort of outstanding. And so if I understand correctly, right, so the issuance accounts would also be on-chain, and this is why we have a specific wallet for the CSD. And then you're able to really do this reconciliation by knowing the overall positions of all the investors on-chain, right?
Exactly. And like Arnaud says, we can do what we want. So this is a very important aspect, actually, of this POC, because we reflected here what we can do. So it's a way of thinking about our infrastructure in a different technology, the different opportunities that we have today. But we did not determine a specific rule book, for instance, or we didn't look at, like you said in the introduction. So you could have, well, the legal minimum, but you could also say, I reconcile at every moment in time.
on a daily basis,
or more
24-hour
often.
cycle,
Yeah.
or instant.
Yeah.
Okay. So now that we've gone through a bit, and don't be, this will be publicly available for everybody else, so that just to be clear. So just to go back to the original slide, and here I think I'll ask a bit more generic questions to each of our panelists, just maybe to see sort of the positives and a bit of the negatives, if there are any, in sort of acting in this specific fashion. So really having a private permission DLT platform in order to fulfill this issuance and environment, and then to do a deal. So personally, I see, okay, there could be a risk of being actually having more siloed, because we would have different private permission DLT platform and not a wide-ranging sort of a global, Ethereum type capital markets platform. But maybe a market solution can come for that. But that's just something that always pops into my head. But maybe going in order here, Arnaud, if you could just take us through, let's say, the positives and the negatives for your business, so for the stock exchange, but also maybe general remarks. That'd be very interesting.
Sure. I think that there are a number of opportunities that the DLT technology bring to infrastructure like MTFs and then to its users. Be it product opportunities, be it business opportunities in terms of entering new domains or even new client segments. If we talk about new products, for instance, and if we hopefully, if the industry managed to somehow control the number of blockchain models that emerge, so the chains, but also protocols and the likes. One could think that there would be an easier access for MTFs to enlarge the coverage of conventional securities that would then be channeled to a limited number of settlement layers, and so that's one way that MTFs could take advantage of that. And it doesn't stop there, because of course there would be opportunities to bring new products onto the MTF platforms. For instance, we could think of bringing existing asset class that often come with a number of holding or transfer restrictions, which are very difficult to manage in practice today. Now, with the new technology and with the kind of programmability that we can put in place, the automation we can put in place via smart contract, it would, at least in theory, be possible to put these instruments available for trading and to have these kind of smart contracts ensuring compliance with those restrictions. And beyond that, we could also, explore other segments such as NFTs or such as utility tokens and the like. So there's a lot of potential there. Of course, each one coming with its own risks. When it comes to new client segments, at least the blockchain allows for direct or indirect participation by investors, and so it offers the possibility to trading venues to offer direct trading access to retail investors. And I think this is even something that is planned in the DLT pilot regime. So great potential for diversification, but it doesn't come without its own challenge, because established exchange very often operate intermediated models. So there isn't such a kind of retail investor access to MTF. So it will come with its own set of challenges and issues to be resolved. Yeah. But clearly an opportunity. And when it comes to new type of services, so I've mentioned this kind of leveraging smart contracts to put in place new functionalities, new services we can provide. One of them that comes to our mind is management of digital identities. Yeah. For investors, which definitely can open the door to a number of new services, allowing issuers to manufacture, to design, to launch products that target very specific identities, and allowing basically the DLT infrastructure to match, basically to perform these kind of controls from the start, which bring a lot of potential in terms of efficiency gains. Another one, I'll come back to my favorite topic, instant settlement. So another one is indeed that at least the DLT pilot regime foresees this possibility for market infrastructure to converge, to converge into a single trading and settlement layer. So this is an opportunity for development. Clearly, it comes also with a number of challenges. And is the market actually ready for this? Is the market willing to go that far? Because it will bring fundamental changes to the way we are operating our businesses. Our treasuries, back offices, ready to manage basically positions, liquidity in real time. But when I say real time, it's real time, without potentially credit facilities. And we often know, for those of us who have been working in infrastructure, that we often compare, at least for bond markets, credit as the oil that we inject. The liquidity that we inject in the system for the system to really work. So this is the type of questions that the industry will need to go through, but certainly opportunities. And one very important aspect of potentially having those lines moving is that, of course, the competitive landscape will evolve, and we do expect increased competition as a result. Not necessarily a bad thing for issuers and investors, but once again, I think the danger there is to end up with a very fragmented landscape. So to be kept in mind, once again, interoperability is key.
Is the key word. So just maybe summarizing your point. So here, what you're saying is that actually we could live in a world where bank A, B, and C would actually be an investor A, B, and C, living in a T0 instant settlement time. So that would basically look like Coinbase for traditional bonds. So that would be I think quite a fascinating world to live in. What about Julie?
Just I did not mean that actually
you want
this is the preferred model, right? These are options, and I think everyone will need to go through its own thinking process to define what is the best model for themselves. But we are convinced, and we often hear about complete disintermediation, and that issuers will treat directly with investors. This is a possibility.
But will
sitting in the middle as infrastructures, we often see ourselves as adding value to the process, and we believe that we can continue adding a lot of value even with that new technology. And same thing for the rest of the value chain, by the way.
And that's the case here, because here I think that the core competence to the corporate trust industry is still a need. We are here to facilitate finally the access to a variety of available market infrastructure, to arrange for interoperability with different systems, a DLT system and the conventional system, and represent somehow the issuer as a trusted party in the system in order to add confidence to other market participants as well. So let's say that there is some additional features can be developed, and we have mentioned previously, like let's say the cash transaction manager. Why not? This is something that we can think about. But here I think that a major step for the capital debt market infrastructure, this is the golden record. The golden record will help in this specific context, more transparency in a private permissive DLT environment here, and help it obviously by a central authority. So I think here this is a real key for us. Now, the harmonization still, we have still to keep it in mind. This is really important because without harmonization, it's like Arnaud said, it will be like somehow lead to a type of fragmentation.
More fragmentation.
Yeah.
And so, I mean, taking what you said, obviously the golden record, what's key is that we could also foresee, I mean, we also made conscious choices not to do that here, but having the regulator having a node potentially on this DLT platform in order to really extract the information. This could also reduce a lot of the specific reporting that issuer and issuance agents need to do. So, yeah. And last but not least, I think a very important player in the room, the CSDs. Are you set to disappear or not? Or are you actually facilitating this?
I'll keep it short because I agree with what my colleagues from LuxCMA said before. No, I think when we talk about this whole process, if you look at the regulatory environment in Luxembourg, it's a lot of it is about well, I wouldn't say control, but making sure that everything is done in accordance with a determined rule book and validating the data and making sure that everything is in order from a legal regulatory perspective, but also from an operational perspective. So I think from a LuxCMA perspective, we also agreed that we need all these intermediaries and these roles also in the future. I think DLT technology is a huge has a huge potential. I will not repeat now the different advantages because I think we went through it already. So we have a cost saving element, we have an efficiency element, we have an element of using smart contracts. But just because of that potential, I believe that it will increase also for issuers the ability to make use of the market infrastructure and to have the accessibility. That's, I think, one of the major ideas. And once we have an acceleration of this potential, for instance, if cash tokens are available on the DLT platform, or if we have a smooth process, because, for instance, we link the platform to the central bank platform, for instance, there are various possibilities. So there we expect, also from a CSD perspective, that there is a lot of possibility to increase volumes for issuers and to have indeed different type of products than we have used to today into the market infrastructure. And then secondly, you asked for negative points.
If any.
Well, that's what I wanted to say. I don't see any. There are none. I just see challenges. So I think we imagined here different types of connectivity of the different banks, custodians, etc. So there we sort of, in my idea, although we did not explicitly perhaps discuss it, but you have different technology, different agents who may be completely capable today to connect to a DLT platform, others not. They would need a hosting service.
And some also don't want to.
They don't want to. So here we sort of depicted that different connectivity. Hence, by default, also the idea of, and certainly from our organization, from LuxCSD, but also group-wide, rather as an infrastructure itself, we believe in interoperability between systems. So that is obviously foreseen here already, also in the idea of the trusted third party, the cash token manager, etc., who would be a new function, but it's a bit linked to the idea of interoperability. And of course, what we also believe is we need to make sure as a market infrastructure, so together with all the parties who would be participating in a business use case, is the idea of a level playing field. So to make sure that there is an understanding among not only those who participate on the platform, but also the other market participants who cannot participate because they do it at a later step, that we have a clear understanding on the legal aspects of a different specific use case, etc., etc. So all those things are challenges. I don't think negative.
Perfect.
I think there is a real interest daily. I speak in my day-to-day to interested market participants who would like to look at this technology. And the challenge is then indeed...
So there is appetite in the market.
That's what I believe, yes. And I think from a LuxCMA perspective, we agree on that. And the challenge is to create then the business use case.
Well, thank you all so much. And before we break, is there any questions from the audience? Okay. I think... Well... Work? Yeah, perfect.
Hello, Paula, the Head of Regulatory Affairs at the Luxembourg Stock Exchange. Thank you for the presentation. Thank you for your work. It's extremely interesting. I have two questions. The first is investors. So basically, and you are representatives of Market Infrastructure Working Group, so it's with no surprise that you are actually more focused on the infrastructure perspective. But from the point of view of investors, what do you think that investors should be aware of the benefits for investors between blockchain issued debt security vis-a-vis non-blockchain debt securities issuance? This is actually the first question in terms of investors' point of view. And the second is the role of authorities, so national competent authorities, EU EU authorities in terms of supervising, oversighting these platforms and these issuance flows and financial instruments.
Since I'm the lawyer on the panel, maybe I'll take the second point. I think a key point, right, that we have to understand about this specific platform is that here we're really relying on legacy systems and not operating potentially on the pilot regime as it's pretended today. So here the CSD that we have today would really still be under regulatory supervision for its activities. So here, kind of the leap of faith I think that the CSD has taken is to say, well, actually, I can do my business today, but using a private permission DLT platform as my own source of records. So still having an element of control over it. So the idea here is to say that we're not operating in the shadows. This is really sort of a CSD and an MTF and different players coming together and all deciding to share the information source. And so obviously, as I said earlier today, I think there is a potential to have the regulator having a node, for example, on this platform in order to grant it more view and more certainty and more transparency. Now, another question is whether the regulator would actually want to be hooked up on this platform. So, you know, in short, absolutely, the aim is still to be supervised, to operate within a legal framework. And then once the pilot regime really kicks in, you know, this could be all of this here, basically in the form of a DLT TSS, where you're combining the trade and the post-trade services all on one platform. So there is potentiality. Here we didn't really go into too much the weeds of it, of, you know, doing a proof as to why it's legally feasible, but, you know, here we're really relying on, for example, Dematerialized Securities Act of 2013 to record the issuance. The transfers that will happen between the banks will rely on Securities Act 2001, you know, because we have these tweaks in the law that enable the issuance and the transfers to be done using DLT systems. And absolutely, having both of the key players here, I mean, the MTF, as was said by Arnaud, it's operating off-chain to a certain extent, and then just loading in the trade results on-chain. So this is also why we made so many numbers of assumptions as true legal to back ourselves. But in terms of the issuer, the investor, sorry, so here maybe one of you want to take that on board and just to say, well, personally, I think the investors would want to actually subscribe to these bonds because there is transparency and you have also an element of price discovery, and this could also add liquidity and as well shorter settlement times. So there's different things to look at, but if any of you want to add something.
I think you've already quoted a number of benefits that investors could expect from that type of infrastructure. Transparency, certainly. Market efficiency to a point, because the more transparent, the better, right? So liquidity to be seen, indeed, if this concept of instant settlement or atomic settlement really helps driving or increasing liquidity. I won't go beyond that, but I think it's a real question, particularly for fixed income markets. But what we've observed in other segments is that there were, some leverage of DLT technology to fractionalize instruments. So, for instance, large or shares that have, a very large price that are not necessarily reachable for retail investors. Some providers have introduced these type of solutions. That is quite an interesting concept. I would add to your points, perhaps, two things. First, because of all these efficiency gains that are, at least in theory, attached to that, one could expect that it ultimately translates into cost savings for investors and for issuers, which is normal. But a more interesting point, in my view, is also that investors could expect easier access to different type of instruments. So, in a sense, diversification for investors in terms of investment option. So I think that those are, at least from my perspective, benefits that investors could expect.
Perfect.
Without necessarily being actually connected directly, by the way. But
I think we'll take one more question. I know we're slightly off time.
Thank you, 𝗪𝗂𝗅𝗏, BNP Paribas Securities Services. Well, the model seems very efficient, but really is dependent from the node that each market participant has to create, to have. How do you see technically the feasibility, cost, etc., to create a node by each of the participants, which is quite similar to a K-Swift exchange in what we would say in a conventional financial market, but is it really straightforward to create such a node?
I wouldn't say so, honestly. I think, there is definitely an element of cost saving once the whole platform is up and running, but the reality is that since it's a private permission DLT platform, you're going to have to set it up. You're going to have to create different authorization to each of the participants. We have to map out who has access to what, who's able to record what, who holds private keys, if even there are private keys. So I think there's a whole element of the tech build that for sure, there are cost elements to this and technical complexities. So today you have different open source software, so 𝗪𝗯𝗓, for example, etc., that are providing options, and then you can also do this on a subset of the Ethereum mainnet. So there are different potentialities, but I think it really is all about how do you want this to be structured and what meets the business case. Can't be more precise than that, unfortunately, but...
yeah, and on top of that, here we're talking about a private permissioned environment. There are other possibilities as well. So that creates, again, then you could think of a public environment which is permissioned, and then that may make the story about the node technically different as well. So I think the first step is to have a clear discussion in a specific use case on exactly how do you want to handle how the central authority of such a platform and the application layer, and from there, indeed, you need to go into the tech build, and there we don't know. We know there are various possibilities, but we did not prescribe here a specific way, just to enlighten, the possibilities that such an environment would bring to the market.
And I mean, we do highlight sort of key outcomes, in the POC, and here we do mention sort of cost saving, but also there is significant also cost to set up these platforms and then to move forward. But that's, just like anything that's innovative, right? There's an element of adoption to be had. So with that being said, well, thank you all, and I think we'll now have a break before the next panel.
Et le panel numéro 2 va vous permettre d'avoir un overview sur les questions actuelles, sur les use cases, sur les choses qui ne fonctionnent pas, les possibilités réglementaires. Et pour ça, j'ai un panel de choc que je vais vous présenter rapidement. Alors, je ne sais pas si on le présente encore, mais pour commencer, nous avons 𝗂𝘅𝗖𝗪𝗏 de la Banque centrale de Luxembourg qui a fait... j'ai découvert que tu as fait aussi Deloitte, mais donc il y a une vie avant d'être central banker et qui est donc notre référence en matière de DLT et qui va nous permettre d'avoir une vue beaucoup plus... générale, la vue des banques centrales, et je crois que tu vas aussi pouvoir nous apporter aussi une vue des banques centrales, pas forcément que de Luxembourg, ce que je me réjouis d'entendre. Merci Pierre d'être là. Nous avons aussi Xavier Leroy, qui est spécialiste dans tout ce qui est Corporate Finance, Debt Capital Markets à l'EIB. Si j'ai bien compris, tu as été aussi chez BNP avant, si j'ai bien compris, et maintenant à l'EIB, j'ai lu avec intérêt que tu étais aussi responsable pour tout ce qui était Eastern European Currency Issuance. Voilà, donc on part de Currency Issuance jusqu'à Debt Capital Markets. C'est vraiment intéressant. Et puis ensuite, nous avons Philippe Muller, que beaucoup d'entre vous connaissent, puisqu'il est auprès de Clearstream depuis 14 ans, même plus et qui est Head of Product Management et qui nous permettra d'avoir la vision de Clearstream. Christian Domen de la Bourse, qui est quasiment monsieur DLT dans tous les groupes de travail, notamment donc à la Bourse évidemment, à la BBL, à l'Alfi, auprès de LuxCMA, et donc tu as une vue très large, aussi bien réglementaire que juridique, et tu vas pouvoir nous apporter aussi ta vue là-dessus. Et nous finissons avec Julien. Merci beaucoup. Merci aussi de nous accueillir ici dans l'hémicycle. Tu as, et je trouve vraiment intéressant, l'idée d'explorer, ton titre, c'est Head Explorating Engineer, quelque chose comme ça, si je ne me trompe pas. Désolée, je suis juriste, hein, et donc des fois je bug un petit peu, et qui permet en fait d'explorer les différentes solutions. Et je me réjouis que tu amènes ta vision aussi produit dessus. Donc, pour commencer, la première chose que j'ai demandé à... Oh, excusez-moi. Apologies for those that doesn't speak French. And I didn't know actually. So just to begin, thank you, Philippe. I wanted to bring a little bit of understanding where we stand in terms of business cases in general. And for that, we spoke together, Pierre, about what Banque de Luxembourg is doing, but also other banks. And I'm very curious for you to explain to us where we stand in this whole framework.
Do you understand? Okay, that works. Thank you. Yes, let me start off first by stating that the central bank community has been experimenting with services on the DLT since 2016. So we started off the ECB with a project called Stella. The report was, I think, published in 2017, and it was on the topic of pure payments. The conclusion was not very satisfactory, so it did work, but we found that there was a lot of scalability issues. So the topic of operating large volume RTGS type payments on that sort of service over long distances with a vast number of nodes did not work properly. So it didn't scale properly at the time. Then afterwards, Stella 2, if I can call it that way, went for DVP operations, so against securities, and it worked quite well. But we also found that depending on the security mechanisms that we put in place, the speed went significantly down. And then, well, I'm not going to talk about Stella 3 because it's irrelevant in this view here. So that was the ECB experimentation with the DLT technology. Then there have been also recent experimentations which are very interesting and relevant to what we're discussing today. So first of all, the Bundesbank, together with Deutsche Börse, explored in the experiment trigger solution or trigger chain, an interaction between the classical platform of the Eurosystem, Target 2, so the payment system, and DLT infrastructures, and it seems to be working quite correctly. So that has the advantage, at least for the central bank community, that we can connect the legacy, or if we call that legacy, with the new technologies, DLT, and therefore we can bring liquidity that way to the market. Then there's also Banque de France, which recently published also, I think it was in November 2021, a report on their use cases, their experimentations. And I think that is quite relevant as well. But that is with the euro on-chain, or with the cash on-chain. So these are the recent relevant experimentations of it. Yeah.
Are you in the same road at the IB? Or?
Allô? Oui. Yes, so I mean, at the EIB also, we started to work on the DLT technology about 3 years ago, and we have been launching the first public bond using multi-dealer on the blockchain last year. And the goal is really to explore the possibility for large issuer like EIB to transfer some of the business that we do on the DLT in order to unlock some of the benefits of the DLT technology.
So the business is transforming from what I'm hearing.
Yes, very much, because I mean, maybe 7, 8 years ago, when you talk to people, when you talk to investors, when you talk to all different actors, you really had two camps. You had like the early adopters and the strong believers, and you had people that were telling you, okay, well, no, it's just it's the fashion of the moment, but it will disappear very fast. It will not lead to anything. Well, no, the speech has changed completely. The question is not if DLT will happen, but when DLT will happen and under what form. And I think clearly the whole environment and the whole ecosystem is changing very fast.
And how did you, what was your experience when you launched the bond one year ago?
Yes, yeah, 1 year ago. Yeah.
What was your return, your feedbacks from the general public, for instance?
It was absolutely amazing. Like, despite the small size of the transaction for an EIB bond, the bond that we launched was 100 million notional, which by EIB standard would be really small. The impact it had from a market point of view was absolutely enormous. So clearly, it incentivized us to continue working on that on that road. And something that we noticed is that, I mean, we are first and foremost capital market experts. Okay, I did capital markets all my life, so if we were to talk about any financial products, I can talk about this for days, and I could issue a bond in my sleep. Okay, but when you have to look at something on the DLT, like at first I knew absolutely nothing, and the reflex that you have when you know nothing is really to focus on the technical aspects, because I say, okay, what is DLT? What is public blockchain, private blockchain? How does that work, and so on. So we put a lot of work and effort looking at those technical issues. But with hindsight, the technology is rather easy. The very difficult part is the legal part, okay? And because what we notice is that when you have a technological problem, well, you can just put more resource at the problem and you will solve the problem. So maybe 1 or 2 engineers are not able to solve the problem. Well, you will hire 50 engineers and they will solve the problem. Once you have a legal problem, if you put 1 lawyer on the problem and he cannot solve it by putting 50 lawyers on the problem, you just compounded the problem, okay? But you're not any step closer to a solution. That's something that we had to learn.
Not taking it personally. No. Yeah. I was about to ask Julien and Philippe, but the bridge is too strong not to give you the floor as a jurist. Do you complicate things at the stock exchange?
Yeah, I don't take it personally neither, so all good. No, I mean, it's indeed something that the legal problems is something that we are also looking into. I mean, we came from a slightly different perspective, because we have not been focusing immediately on the technical side, because we wanted to bring this slowly to the market, and we were thinking, what are the functions actually of a stock exchange? And all the functions is obviously all that marketplace aspect, but the marketplace is also a showcase to some extent. So showing people what products exist, what is the information around those products, etc. So and that's where we launched this idea of, let's display first of all those tokens. Let's create a place where token issuers can provide their information, get in touch with investors, and so on. So I think that's something that was our initial approach. Now it is obvious that we will also slowly move forward, but obviously, as was mentioned, the regulatory side is quite challenging, so we have to move forward into the direction of the trading aspects of an exchange, etc. But there we have to then fit this into the regulatory framework as it exists today. And I think that's something with the pilot regime may become easier. But I mean, there are a lot of unknown things today, and I think it's important to look into it, to get an understanding of both sides, the regulatory side and the technical side, so in order to be able to move forward once the pilot regime or another regulation hits the market.
What I hear from you is a lot of the words that you are using so far is moving forwards, the next step. So, Philippe, is the traditional market done? Is it broken? Are we?
No, certainly I would not agree to that, and I think that's not the underlying starting position. It's not the starting position, is the existing system is basically broken. I mean, issuers are reaching their investors every day, right, since many years and in high volumes. We are living today through difficult times with high peaks in volume transactions, with a high number of volatility, and the traditional market infrastructure are guaranteeing this and ensuring that this happens, and that the market is basically shielded from that. So there's a lot of trust in the established infrastructures, market infrastructures, in the network and the ecosystem, which is basically around that. That being said, it does not mean that the new technology basically does not offer new opportunities, and these new opportunities should certainly be looked at and potentially address some shortcomings in what we see in today's market infrastructure and in today's ecosystem, basically.
I'm going to come back with the shortcomings.
That's why I stopped at that point.
So, and then, Xavier, now you have a more, I would say, private-public view than probably the others. What have you seen in terms of business cases or use cases so far? Are we still on the traditional side?
Yeah, and it's Julian, by the way, but
oh, sorry.
we look alike, so that's fine.
Well, don't worry.
No, that's all fine. Yes, indeed, I totally concur with all that. So there's three scopes basically, and the cash, the security, and the custody elements. So we've been testing all these three. Some are public, the cash with Banque de France and other banks, by the way. Security, custody, of course, as well, with the custody elements in our security services, and security tokenization, which is not yet really public, but we're actively working on that. We hear a lot that blockchain disintermediates. To be honest, well, it does in some ways, but I don't think it's not because you say it's a Picasso that it becomes a Picasso on a blockchain. You will need some intermediaries which will structure and validate the value to be written on this chain. And that's exactly the intersection between public and private. So what will be this ecosystem with these intermediaries in the coming years? We don't know yet. It may take 10 years, by the way. But what's for sure, it's starting now. And back to your point, it's not if it will happen, but when will it happen? And we see the ecosystem moving now to understand this technology and to complete what's being said. Yes, it's not about technology only. Although technology has an impact on the business, and the technology you choose changes the way you do business. So it's technology, business with the use case, compliance, and legal. And if you don't work with those four streams all together, it won't fly. So it changes. It's very interesting because blockchain is kind of a transversal way. It's a single source of truth across an ecosystem. It breaks the silos, but it breaks the silos in a business unit, it breaks the silos in the functions, it breaks the silos in the regions and the legal elements because suddenly it's global, etc., etc. So the more we can articulate these elements between private and public and working with the instances and the private players to build the solutions of tomorrow, the better, in many ways, to reap the benefits of this technology. And just to, on this point of, is it broken? No, it's not broken. It works very well. It works very well for huge amounts, highly frequent issuances and these kind of things. There are some underserved markets. So likely it'll serve these underserved market with smaller issuances and move up to this market, so in a few years' time. So that's the key question. And it has to be integrated. What we hear from our clients is, I don't want to connect to yet another system, okay? I'm connected to your systems. It's a bond. I don't care, it's a token, to be honest. So the point is how you integrate that technology so it's transparent to the market. And basically you shield that for a few years' time, which will be very painful. You know, there's no cash on the chain, etc. But the way you do it for the next 5 years, then you'll be ready in 5 years' time to move on to this new world, and it'll be transparent for our clients.
Yeah, because you mentioned 10 years, which I think it's way too long, to be honest. But that's my personal opinion for sure. But you said 5 because you get to have all the stakeholders, because the 10 years in your hand is the end of the roadmap. I would be also curious to have your view on this roadmap. We were talking about moving forward. We are talking about shortcomings. Is it going back and forth and back and forth? Do we need to get more people around the table? I'm very curious about that.
Just on that, on the 10 years, it's exactly the same lifespan of between an Amazon in '93, which is just doing e-commerce, and an Airbnb or Uber. So it's basically 10 years is not that long if you've got these new services coming in. It takes some time in the mindset of
it's for the mass adoption.
Exactly. Yeah. So you have to think about that. So central bank digital currencies, you know, might be in 2025, slightly later. There'll be enablers. It's already there. EIB has issued a bond on the blockchain.
So on that, maybe if I can add something, but it goes exactly in the same point. So I completely agree with Julian. Some people that are not in the blockchain world were asking me to explain what was the impact of the EIB transaction that we did last year. And the best comparison that I could find is equivalent to the first email ever being sent, okay? So it's a revolution, but you have to remember that the first email was probably sent somewhere at the end of the 70s or somewhere in the 80s. And between the time where the first email was sent and the world where email has become basically the only way of communicating with people, it took 20 years. Okay, so once again, the time frame, it really depends what you're looking for. But, and even if you remember in the 90s, when you had emails, you wanted to download your emails, it took 10 minutes, okay? And if you had pictures attached to the email, then it was 20, okay? Because you had a lot of infrastructure problems that had to be resolved before we had instant email communication. And I think it will be exactly the same with blockchain. Yes, blockchain is the technology that I believe will change the future. I still believe that it's a question of when rather than if, but still it will take longer than what people expect because the obstacles that needs to be overcome are still many.
Yeah, I think I tend to agree somehow with what Julien and Xavier were already mentioning. The idea of a revolution, so this is really transforming the market. And in order to transform the market, you need to nevertheless take the market along, right? It's good to have individual cases, individual use cases, which work with a few stakeholders, but if you really want to scale it up, you need to have a larger rate of participants, and you need to take the market along to do the change, which will then also require a shift of mind, changing existing processes, thinking of how would this work in future, how would the roles change. I mean, we had the proof of concept presented earlier, so obviously certain of the roles which are established today will probably change then in future, question mark even whether they could be done in a different manner. It will require investments, it will require knowledge sharing, it will require trial and error, so there's definitely something to be done to enter into a certain order of scale. The other thing probably which is also true is that we see a lot of use cases which are then done by individual stakeholders and individual parties. But nevertheless, I think in the end, for it to work, there needs to be the interoperability, it needs to be connected, it needs to be to work together. Otherwise, this kind of revolution will not basically come along. But I'm also sure it will eventually come, but it will take some time. So 10 years might sound long, but it's probably not.
Well, I was about to ask you actually, because what I hear from you guys is not necessarily about the regulatory and legal framework actually. It's about people exchanging and seeing what's the best and understanding the framework. It's interesting because most of the time you say it's about legal and regulatory. Now the pilot regime is going to change. We see if it's going to be really adopted everywhere. I would like to speak about more the ecosystem and taking again a step back on that. What's your take on that, Pierre?
Well, if you remember well the cases that I mentioned where there were experimentations in the Eurosystem, central banks to issue or to serve the DLT needs, we actually see the different types of solutions. Like, for instance, the trigger solution interacts with traditional with the modern DLT infrastructure, which are maybe going to be the future. But the merit of this is that it does not touch the regulatory. It avoids touching the regulatory. To have, I mean, we hear it often that issuers would like to have, or any actors in the DLT would like to have cash on the chain. But having cash on the chain requires a completely different legal framework. We have to test whether it is courtroom capable. I mean, I just heard Philippe mention there's going to be a lot of trial and error. But I don't want to be in a position where we have an error and somebody will have to be told, sorry, your transaction did not take place. You neither have the securities nor the cash. We're really sorry for you. So we cannot go for these sort of solutions. So we will probably have, as a response from the Eurosystem, a progressive scaling of the service that we can issue, that we can offer these sort of environments. So clearly we need a complete work by the lawyers. Hopefully the lawyers are going to help us on that one, to have a bomb-proof legal framework under which we can operate in these environments, an adequate DVP operations that is legally sound.
So it means it's for you guys to come before and ensure that the ecosystem works at your level before going into the whole ecosystem. You and then.
No, but I think the issue that we have, and the reason why we say the legal and regulatory aspects are complicated is because it's a chicken and egg problem. Technology is evolving very fast. By nature, regulation is slower. There is nothing that can be done about it. Okay, but then a lot of actors are hesitant into choosing that or that solution because maybe the technology is there and promising, but the regulation has not been catching up. So it's slowing down the process. And when the regulation has been catching up, well, then there is a new technology. So it also contributes, I think, to a fragmentation of the market. With maybe different ecosystems trying to be formed and okay, some people even with the best intention trying to connect each ecosystem to something bigger. I mean, it's complicated because you have a multitude of actors working under different premises and different assumptions and trying to catch up with their own regulator, because what we did not mention is that regulation is also fragmented. The regulation in France is not the regulation in Luxembourg, is not the regulation in Germany, and their own technological capacity. And that is a complicated mix to work around.
And to add a bit of a complexity, the three pillars, you have to regulate the security pillar, the cash pillar, and the custody pillar. And regulations are not at the same pace in a given country either. So if you really wanted to reap the benefits of the blockchain end-to-end, it's likely to be difficult, at least today. It'll get there, but it'll take some time. And it's back to this siloed approach. All this is siloed in terms of regulation, so it's a matter of connecting all that to have really the end-to-end picture.
I mean, I absolutely join what Julien is saying, that at some point in time, everything has to come together. So you have to get the business solution right, you have to get your technical solution right, and on top of this, regulation has to some extent make this possible and give the necessary comfort. And I think comfort is here really the thing that everybody is looking for, trust into that new kind of solutions. And I think that's something that we have to build up with all the market participants. I mean, on the one side, issuers are already, we see this taking some traction in issuing because there are laws, etc. I think something that has been a little bit forgotten is the investor side. The investor side, they need also that comfort to invest in those kind of products. I mean, it doesn't make sense to have the best product in the world if nobody buys it. So you need to build this up. And one element in this is that investors are looking into products sometimes just from an economics perspective, but also to tick certain boxes. And some of these boxes are on the regulatory side because they can just invest in one type of product that has to match this and these criteria. And I think that's something that even with a pilot regime, even with whatever is coming up in the near future, we are not necessarily at that level where we can exactly replicate what is happening in today's world into the DLT world. And so I think that's something that has to grow slowly, steadily into something that is big enough to be recognized as equivalent to what we see today. And I think that's something we are all working in our own spheres on this, but it has to come together at one point in time.
And when you say we as European, we as Luxembourgish, where we stand in Luxembourg,
I think in Luxembourg we have a quite good position on this because we have the opportunity here to, on a very easy level, to unify the entire value chain. And I think that's important in that context. DLT is not about one single project that one does on its own. It's about creating that ecosystem approach because it is something that will impact more than just one person around the table. So you need to bring them together. And I think that's where Luxembourg has a quite unique position. Europe has today a little bit the advantage that they have taken the initiative in 2020 to build up some regulatory framework, even though it is not yet adopted, it is not ready yet, etc. And there are plenty of things that need to be added probably to that framework. But there is something that is ongoing. And I think we should really try to make sure that this ends up quickly into something concrete that we can start really working on this. And I think that's important to keep that traction going now and everybody works towards, I mean, a goal to be defined, but I think it's already the idea to bring that ecosystem, as we did with the POC, into something that is tangible on the DLT.
Yeah, I would complement that. I definitely also think that in Luxembourg we have the potential. We definitely have the potential for the reasons that you already mentioned, Christian. It's a community we know each other. We have experience in international capital markets. We have an ICSD here, we have a CSD here, which is connected to central bank money. We have a Luxembourg Green Exchange. We have the main listing place for Eurobonds, etc. So there's a lot of experience and knowledge in here. We have the European institutions in here and large supranational issuers. So we can make a lot of things happen if we take advantage of this, and if we seize the opportunity to move ahead here on the Luxembourg side.
And I think on a purely regulatory side, we have a regulator, and I think that's important when we talk about collaboration. We have also to start collaborating with the regulators on this, because I mean, it was mentioned before, we are playing always catch up between technology and the rules here, and I think the pilot regime is a very good initiative in that sense that it is principles-based. It doesn't go too much into detail, but that detail is needed. But it comes at another level. It comes at the regulator level and so on. And that's where collaboration needs also to happen between the market participants and the regulator, in order to make sure that everybody has the same understanding. Everybody has also the understanding of the technology, and at the end of the day agrees on something that makes sense to the entire market.
Sorry to contradict some of the messages stated here, but from a cash perspective, I think we have to have a pan-European solution. The investors are all over the place, and they will need to pay, if I can put it in these terms. And so therefore we need also in this ecosystem a harmonized way of paying all over Europe for these transactions. So I think it is a bit of a mix of all that. For the issuance might happen locally, but I think the transaction will happen all over the place will have to happen globally.
And how do you see the harmonization coming from the regulators, from the standard setters, from the private sector collaborating with the public sector? How do you see this harmonization coming up?
I know that the Eurosystem is, for instance, asking itself how to provide services to this community in a harmonized way. Whenever we tackle an issue, we try to have it in a harmonized way so that it works on a pan-European basis. So I know that we are working and thinking about the topic, how could this sort of services be offered. It's of course not the key services, because we have many other aspects. We consider that a little bit as a niche, just as you highlighted, Julien. But nevertheless, it has to be pan-European. We cannot live in a long-term perspective with just local solutions, not in 2022.
And maybe quickly, interestingly, I've got a bottom-up view, more kind of an entrepreneur. So it's coming with concrete use case where we show the benefits of blockchain on very specific domains and engaging with the regulations and showcasing the advantages. I think that will drive better this kind of approach in some ways. So the more we have use cases which are concrete, the better.
You can show and discuss.
Yeah, and actually the discussion, and that's the approach we have, and I think that's the approach we all have. It's really to do things, because nobody's got the answers. I tend to say, the best way to predict the future is to build it. I don't know who said that, but it's exactly what happens. We don't know how it's going to look like, but we have to do things, because by doing things, we know, okay, but who's liable for that, for instance? There's some rules. I don't know, control a role in the blockchain world, which doesn't exist in the traditional world. Who's liable for that? It's kind of a superpower. And by having this concrete and said, you can do this, and in this context of issuance, so now how do we manage that? It's very concrete. And you cannot take this before if you just do slides, for instance, or laws, which again, I love laws. But doing things concretely, engage the discussion outside of politics anyway, and on a very concrete use case and bringing value to the market.
What I find interesting, and I would like also to hear about that from you, when you issued the bonds last year, you chose a public blockchain. And we spoke about harmonization, and I would be very interesting, and maybe you guys can also add on that, but is the harmonization, the mass adoption coming from public blockchain? Because then you are speaking all about something that everybody knows, or on the contrary, given the fact that you can never really master a public blockchain, that you can never handle fully a public blockchain, a private blockchain, a European private blockchain can also be on the mind. I would be...
Well, it's not an easy solution, and there is no easy answer, because both the public and private blockchains, they have their benefits and drawbacks, okay? But we chose the public blockchain on our product because it was the easiest solution. It's there. There was no need to build anything. And it was complicated enough to work on that project and to explain to investors what we wanted, that if on top of that we had to explain what is the blockchain that we had been designing, to put the bond on the blockchain, it would have been too complicated. While in our case we used the Ethereum public blockchain. If any investors had some knowledge about blockchain and any infrastructure, they knew about Ethereum somehow. So it also made the discussions, a lot of discussions easier. That being said, public blockchain have some limitations, okay, in terms of KYC, for instance, and also in terms of capacity to process transactions, scalability, that at the moment would certainly prevent mass adoption. So
I'd say it'll be a mix of those private space and public space, and we have to articulate that. We don't have the answer yet. I come back to the forwards of this event this morning from Julie. She said open and accessible. I mean, if you want to be open and accessible, it cannot be private. So eventually, if it's a private blockchain shared globally, to me it's a public blockchain, to be honest. But eventually, we have an ecosystem agreeing on a single source of truth, okay? And the promise of blockchain is digital unicity. You can now pass these securities across this ecosystem in a unique way. So if you really want to be open and accessible, there has to be some sort of public element in the picture, but you don't want to duplicate ledgers. So,
like a public permission blockchain?
Not even, because read is fine. It's the right, that's a problem, okay? But even the read we may argue with anonymity, etc., but that's another story. So typically maybe in a pre-trade space or trade space, permissioned private blockchain, but when it's been traded, it's on a public blockchain for readability. That's what it could be, for instance. So really, this question has to be managed properly. And again, the true value will come from that publicly available chains. And what's for sure is there won't be one public blockchain. In the end, there'll be multiple. And interoperability has been mentioned a few times already. But again, and cash won't be on a public blockchain. I doubt it will be, yeah, to be honest, we'll see. But just the DVP, if you got the cash on one chain and the security on another one, how do you do the DVP, the interoperability? How you guarantee the digital unicity on the security for one blockchain moving on to another blockchain, on a repo, whatever. So we have these kind of smart contracts or whatever. There are ways of doing it, but it could fail. They're bridges, you know? So the code starts to be very, very important. So it'll take time. It'll take time to settle and, you know, to have all this available. But interoperability and articulating private and public space will be the two key strong elements in the coming years. Yeah.
That's interesting.
Yeah, I think the debate is much deeper than just public-private permissionless. It's really something. If you look at what exists out there in terms of DLT technology, it's a technology stack ultimately. It's so diverse, and you can really build something that is adapted to whatever you need. And I think that's where we need to understand. It's not choosing here between macOS or Windows. I mean, it's not that kind of easy choice to some extent. It's not black and white. There's a lot of gray in between. And I think that's where we need also to understand better those use cases. What actually do we want to achieve? Where do we want to go? What are the goals that we are here trying to pursue? And I think that's the interesting part, and also the exciting part about blockchain is that you have much more possibilities, but you have to leverage them and afterwards build the technology. And I think that's where also, again, I come back to the regulators, I come to the laws, we need flexibility to achieve those things, but within the same goal as we had before: market integrity, investor protection, and so on. I think that's the overarching goals that we still have, but what is happening beneath, there we can start doing things differently and end up with something that is more tailor-made, maybe.
Pierre?
Yeah, I just wanted to react a little bit on the cash side, and also in terms of interoperability. I mean, we have all spent a lot of time, effort, and money in harmonizing our frameworks. We now largely use Target 2 securities for settlement of securities. There is a lot of ease in which securities can be settled. Fungibility of securities, there's no question about these sort of things. The same thing about the settlement asset, fungibility about it. You sell something, you have received it, you can immediately reuse it. So we will have, if we enter the DLT world, we have to address all these issues again. And that is one of the tricky situations. And also reacting vis-a-vis the cash on-chain or topics like that. At the moment, we have largely a legal framework on cash in accounts. So it's all account-based, if I can put it in these terms. And now we are pushed into a world of token. What is a token? How do you guarantee these tokens, etc.? So there's quite a lot of difficulties around that. The fungibility of the settlement asset. Can you reuse immediately what you received to do the next transaction? How can you do that? And for the Eurosystem, one of the sensitive points is also that the investors understand what their settlement asset is. At the moment, you have quite simple world, if I can put it in these terms. You've got central bank money on the one hand, you've got commercial bank money on the other hand. The commercial bank money, you know who you have it with, therefore you have risk assessments and you know where you're standing, roughly speaking. Whereas if you enter the token world, then you have the concept of who is issuing this token, who is guaranteeing this token, what are the intermediaries in it, is it a stable coin, you know, what are the mechanisms and the guarantee frameworks, etc. So we have a lot of gray zones around that. The Eurosystem is also quite afraid that there would be issuers who would back basically a token with central bank money and sell it as central bank money, and at the same time it is no longer central bank money if a private entity has it circulating around and the control is totally lost. So the confusion, or the potential confusion around a settlement asset is something that is ultimately quite important to the Eurosystem, that all the actors understand what they have, what they do, and what they do it with.
And I think as well that there is a responsibility, not an accountability, but really a responsibility in the choice that a big player will choose one solution over another. I mean, if you use public blockchain, then definitely you have a rise of the intrinsic value of typically Ether. When you announce the Ether came right and to the top because of the announcement. So I think this is also probably something that that you need to take into consideration is when you develop a proof of concept, either on the private, on the public side, the consequences that is going to be perceived on the markets. And probably that's also a consideration that you all took into consideration in your concepts.
Very quickly on this one. I think what's available today won't be what's going to be used tomorrow anyway.
Yeah.
So whatever we do, it's explorations, it's one-offs. So it doesn't endorse any ecosystem at all. Honestly, it's just, okay, we have some tech available. This one is more ready than the other one, so let's use this one, but we know there's some limits. So I think it's the mindset here. We have to experiment, and it's not the technology per se, it's the impact on the systems and the way we do business that we want to test and learn from. So today it's Ethereum V1, tomorrow V2, Tezos, 𝗟𝘂𝘅𝗖𝗠𝗔 𝗘𝘃𝗲𝗄 I mean, there are new generations of blockchain coming in. We'll see. Again, it's likely to be a 10-year journey. You know, between now and then, we'll see what happens. However, that's quite interesting, especially for tokens. I mean, if you issue debt on 20 years' time, I mean, 20 years is quite a long lifespan in technology. So you've got to make sure that you're sure how you're going to manage that token, because it's very likely the blockchain you've issued it on won't be there in 20 years. So the lifespan is quite important. Yeah.
Okay, so I actually raised question that we didn't prepare. The M didn't raise some questions. Do you want to add something specifics on the roadmap, on the shortcomings, on something that we didn't touch upon?
I mean, from my side, it's on the last element. I think indeed 10 years is nothing, because I didn't want to mention it, but Bitcoin exists more than 10 years. So it's bad B word. No, I think it's from a regulatory side, which is what I'm obviously most interested in. One element that was already mentioned here is, and I think it's important to keep this in mind, we are changing here fundamentally the technology. We are going into something that is decentralized, distributed, and so on. What about accountability? What about responsibility, liability, etc.? So I think that's really a fundamental point that is not even, it is slightly addressed, for instance, in the pilot regime, but it is something that needs to be deepened. But it needs to be deepened in collaboration with those that develop those solutions, because we need a deep understanding of what is happening to better regulate what is happening. And I think that's important, that here again, technology and regulation works hand in hand to see what is possible and make at the same time those efficiency gains, whatever is the ambition of blockchain, of DLT. Because I think, let's take the example of programmability. A lot of things could theoretically be programmed into a smart contract, but somebody has to be accountable for this at the end of the day. And I think that's a bit the kind of questions, I mean, there are plenty of those questions. It's just one out of a
DeFi.
million, but I think it's the kind of thing where you see, okay, it's not you in your own little room that can do this on your own. I think there is a lot of collaboration effort that needs to go into this.
Yeah, I definitely think, I definitely think, I mean, it was mentioned already before, it's a journey on which all the different market players need, as the ecosystem and the market players need to come along, exchange. And what you mentioned, Christian, I certainly subscribe to take the regulators and the legislation also along the way, involve them in basically the difficulties and the challenges that are being discussed, and have it as a kind of evolving process. So it doesn't really work to think for one single institution or in pairs, basically, to come up with the ultimate target operating model if it's not taking other market players and stakeholders along.
Yeah, it's definitely an ecosystemic approach. Now you got that, I guess. So it's a lot about co-creation. It forces all the parties to work together. Issuers, structures, investors, regulators, etc., to find the right solutions. And maybe the hardest thing is not what we think, it's the mental fixedness of we're human beings. It takes time to shift mental paradigms. I'll draw a very quick example, parallel. Electricity in the 19th century came in. So all the factories at that time, they were powered by steam. Okay, so steam, it was a huge central column with lots of things around to get the engine running in the factory. So huge central column. Electricity came in. Guess what we did? We put a huge central column with electricity, and same. It took 20 years for human beings to say, but come on, electricity, I can deserve the engines where I want now. So that means I can put the engines, I don't need this central column anymore. And that means I can rethink my factory. And these two machines, they were apart, they need to be all together. And they started to rethink the factory. And it changed totally the factory world. I mean, all the old players disappeared. The new ones, based on electricity, they took the market. It hasn't changed factory per se, but it changed the total ecosystem. But it took 20 years for the human, to just realize that they could do things differently than to this technology. I think it's somehow similar with blockchain.
A bit like Schumpeter up, and then you have a new redistribution.
No, but I fully agree with everything that was said, and maybe the key to go forward is for players to identify sub-pockets where they can extract value concretely relatively fast. Let me give you an example. If you say that one of the efficiency gain of blockchain, for instance, would be to simplify massively back office operations. Some people would say, well, as long as I'm forced to run a dual system, because like the world is not going to shift to 100% blockchain tomorrow, so as long as that's not the case, I still need to have my old back office to deal with my old bonds or old financial instruments. And then I need, on top of that, a blockchain ecosystem. So for a short while, or for maybe a long time, I will need to have two systems, okay? But maybe in some subsectors, like, I don't know, repo, for instance, you can identify some key players. Let's say that you are doing a repo operation with 10 counterparts, but your top 5 counterparts represent 70% of your business, because it's always the case. You have large players with whom you do more business. Well, then if you just manage to shift to blockchain with these 3 or 5 counterparts, you can extract 70% of the value of the blockchain with only limited investment. And I think that's the way forward. And when a lot of players will do that, it will start shifting the markets towards something.
So actually, it's a little bit different from what you said. You said from the small to the biggest, and you say the biggest is the biggest market. So you have to give priority.
I think it's similar with both things. You have to do concrete things and to start with very scoped elements. So then the angle is up to anybody to take it, but it's very similar.
Thank you very much. Oh, yeah, go.
Yeah, and just to add to that, and they need to create value, add value for those who are involved. I think this is also the important element. Otherwise, yeah, it again remains a kind of proof of concept or a test. So if you find these pockets where you can immediately create value and immediately create the efficiencies, I think this is these are the sweet spots to pick from to move this forward.
Yeah, and underserved markets is usually a good way to look at. Look at people that are not served today and see if you can serve them with this technology.
Maybe we have time for some questions. Do you have any questions? Yes, please.
For these interesting discussions. I have two questions. The first is the environmental issues around blockchain DLT. So is this an issue or it's not an issue at all? And the second is actually, it relates to the last point regarding the regulatory approach to these topics. Whether in the future also regulation needs to be seen in a different way, in terms of, instead of regulating a master or the entire blockchain flow, maybe regulation should actually focus on specific topics, whereas you mentioned actually, if we identify or if the industry identifies something which is bringing added value, it's efficient, so maybe regulation could target that specific topic instead of trying to regulate the entire flow of these issues. So whether you think that also regulation needs to act in a different way, bearing in mind that blockchain and DLT is actually something maybe different from what the market is used to see.
I can take the first part maybe. I will leave Christian with deal with the regulation, but for ESG, I think it is and it is not a problem. So in the sense that as of today, you could see the energy consumptions and say it's a massive issue. But most of the time, the problems that you can identify from day ones don't end up to be the problems in the future, okay? And I think it will be no different from ESG because things are moving very fast. And you can already see that some studies have been done, like you have different consensus mechanism with blockchain, and the passage, for instance, of a proof of work consensus mechanism to a proof of stake would reduce the energy consumption by 99.95%, okay? So the solutions are already there, and I don't think you can forecast what the energy consumption will be in the future based on today's technology. So I'm very confident that all these ESG questions will be solved in the future.
And I totally agree with that. And it's only a question for a few blockchains. So it's only for public blockchains, by the way. Okay, quite important. It's all blockchains. And it's true for Bitcoin, can I mention that? Yeah. And Ethereum, which are proof of work blockchains. Ethereum is moving on to proof of stakes. As you mentioned, it'll drastically reduce the energy costs. And again, it's only temporary. The technology used today are to understand the impact. And even if we use those technology, we can ensure that the ethers we take to write on the blockchain are coming from renewable sources of energy. Because you have to think about where can I get this energy in the cheapest way. And renewable is actually a very good opportunity because there's a lot of energy being spent and wasted in that context. So we know some players, they're harvesting this energy to actually provide some services onto blockchain for that, specifically for that. But in 3 years' time, I'm sure it'll be not a problem anymore. It will have switched to other proof of stakes or whatever consensus.
The only thing is when you go from proof of work to proof of stake, if it goes, of course, we hope it will go for Ethereum, you are also deciding to let aside the value or the strengths of a protocol. And nobody is arguing that a proof of work is stronger than a proof of stake, but that's other questions.
Maybe just to add also something, On the environmental topic, I mean, I will not go into what happened in the European Parliament last week, but that's a different topic. I recently compared it to electric cars, because I mean, today we all know that those batteries, in particular when they're using rare earths, cobalt, etc., are not far from being perfect, and certainly not what we wish to see in our cars. Today, I think with blockchains is a little bit the same. We know that at some point in time, we have to go through a route that is not ideal to end up with something that makes much more sense. And I think that's where we have to have this consciousness. You cannot forbid from one day to the other something that you need to make that evolution. It's a step in the evolution. You cannot just delete that step. I think that's one aspect. On the other aspect, and that's a discussion we had a lot at the exchange when we drafted our guidelines on the security tokens admission on Sol, because we put there actually a requirement with regard to the environmental considerations. And the idea here was to raise that consciousness. It is something that needs to be discussed, where developments need to go into. There is no right and wrong in my view today, because reports are even contradicting itself, etc. So it's a lot of contradiction, let's say that way in out there, and I think therefore it's important nevertheless to raise the awareness without judging. And I think that's our ambition here, to really make sure that investors that are investing in tokens have that awareness that there might be some considerations to be taken into account. Now on the regulatory side and how regulation has to be reconsidered maybe going forward, I think indeed it is something that requires, and we are touching quite fundamental aspects of regulation. I mean, the liability as we know it today is something that dates back from the Code Civil 1804 and so on. So it's really something that is, again, very deep in our mindsets, that we know how it works today, but we are not facing, or we haven't been facing so far, something that is fully autonomous or could be fully autonomous. I mean, regulators don't want this. We know what happens to DAOs. We know how DEXs are perceived today. I mean, that's something that is not in the ambition to see that kind of products being regulated, but it is something that provides a certain efficiency. It brings also certain advantages, and regulation has to think about how to make eventually this possible, but still keeping those major goals that I mentioned before: market integrity, investor protection, keep these goals alive, but doing maybe things in a slightly different way.
The best example for me was the application of the anti-money laundering and requirements against GDPR. Because you have not the same aim, you don't have the same implementation, you have controversy, and you have regulators, not necessarily the same regulators, that have to take position sometimes, and it does need some harmonization for sure sometimes. Any questions? Would be very happy to take your questions. Yes.
Very often there is this possibility that blockchain could offer, which is highlighted, which is this direct access or direct holding compared to disintermediated models like we know them today. For a big issuer like EIB, is that something that you see as something you are looking for? In different ways to place your securities or sell your securities in the future, and let's say reconnect or get closer to your investors?
No, it's a good question. For us, we want to change how the system is working to optimize some of the flows of the systems, but we don't want to break the system. And that's very much a reason why, I mean, when we launched the first bond, we have been studying many different ways of doing things. One of them would have been to have a direct connections, for instance, between the EIB and investors, but that's not the road that we have chosen, okay? Like some players were also pitching, okay, well, you can issue in Bitcoin, I had not mentioned it, for instance. And so they were telling us, okay, well, you can get rid of the dealers, you can get rid of the central banks, like you don't need anybody. But that's absolutely not what the EIB wants to do. We collaborated with central banks, we kept the dealer banks and so on, because we strongly believe in the stability of the system today. We just want to address some of its flaws. So at the moment, we don't see much value in going full decentralization for an issuer like ourselves. It could be different for other players. I think something that you have to keep in mind is that all the players in the ecosystems, they are fulfilling a role, okay? Which means that if you want to replace them, you have to be ready to fulfill the role that they were playing. And for instance, the banks, they are doing on behalf of someone like EIB, all the KYC and AML checks. So when they are in between the issuer like EIB and the investors, they make sure that our bonds are only placed to institutions that are acceptable. And if they were to fail in their duty, it would be their responsibility. If we wanted to connect directly with investors, all these checks would have to be performed by the EIB and would have to become our responsibility. And we don't have the resources, not the staff, to be dealing with the amount of investors that the EIB is dealing with. So that's the reason why we chose that path.
So what I hear, and I'm here also to provoke the debate, is that stability equals traditional financial players. And because you do need sometimes these financial players, you don't necessarily want to wholly disrupt the ecosystem?
No, it's more like when it's not broken, don't fix it. Okay? So something is working just fine. Yes, I mean, like in terms of KYC, AML, and so on, we never had any issues. So for us, the system works very well. It's just that some of the benefits of blockchain, faster transaction speed, for instance, or reduction of fixed cost, less need for reconciliations and so on, could be better addressed with blockchain than they are addressed with the system today. But it doesn't mean that we have to kill the whole system in order to get there, right? So.
Yeah, and I would concur. It's not about technology. It's not because you're able, technology speaking, to send a token to someone's wallet that it's going to happen. It's all about the responsibilities and that's the liabilities. And a good example is the custody element, the private keys. Yes, an investor could have the private keys on a piece of paper for his X billion euro whatever fund. Adopt, it will do that. So you will need players, which actually are the players of today. They'll have to move into new rules, but that will support that new technology, but within the same context as of today. Back to this responsibility element, and that's quite key. Again, it's not because you can do it that it will happen, and maybe it will in 30 years' time. We've got a bit of time, but I don't think it will happen over there.
Any other questions? If not, we can close it earlier. Thank you very much for your participation. Thank you very much for your insights. It's very much appreciated. And I think we are going to... Yes. Thank you very much for your time.
All right. Thank you so much, Biba, for moderating this, what has been a very interesting panel, I must say. A lot of food for thought for us in the coming days, weeks, months, years, as I heard, 10 years. So we've reached the end of our conference, and for those of you who are present physically, we'll be able to continue discussions over a few refreshments. And as the last man standing between you and the refreshments, I promise I won't be too long, but I wanted to, if you allow me, to extend our gratitude on behalf of LuxCMA to a few persons that have played a key role in helping us to organize this event. So first of all, a big thank you to the whole BNP Paribas Securities Services team for helping us coordinating this event and also for hosting us in this fantastic venue. Thank you very much. Outstanding job. A round of applause as well. Thank you. And this event wouldn't have happened if we did not have also the support of the LuxCMA team and more particularly Joanna Casoli. I mean, your hard work has made the difference here to get us together. Thank you so much, Joanna, and thank you for being patient with us in the preparation. I know it hasn't been so easy. A big thank you as well to our guest speakers, Ms. Julie Becker, the chairwoman of LuxCMA. She had to leave, unfortunately, but certainly also to Laurent 𝗟𝗂𝗅𝗲𝗂𝗂𝗂𝗂. Thank you very much for coming, over from Paris to kick off basically this very interesting conference. We truly appreciate that, your inspiring words. And finally, I will, and also personally, will thank all the LuxCMA Infrastructure Working Group members that have spent countless hours working on this proof of concept over the past 12 months. It hasn't been easy at times, but there was a strong enthusiasm and a lot of contributions coming to the table, with sometimes challenging each other, which is always good. So, and a big thank you also to the lead of that task force, Philippe Nöldner from Allen & Overy. He's done an outstanding job in keeping us together and finally closing on that work. And by the way, this proof of concept paper is going to be released later this week. So please stay tuned, because we only covered a fraction of what is included in that paper during today's short presentation. So we would definitely welcome any type of comments, questions, challenges that you have when reviewing this. We'd certainly welcome the opportunity to continue the discussion, basically, because the work doesn't stop there. We've heard also from the panelists that Luxembourg has a card to play here, that there is a strong ecosystem in place that is open to innovation. We've got the regulators also that have that mindset of being open to assist the market in making the right type of move. So let's make sure we keep the mobilization that we've seen in the past month. And I know for sure that this is the case, because there's a lot of things happening already now. So definitely this is not the last time we meet to discuss DLT in bond markets in Luxembourg. And finally, so I will invite you, please stay tuned and review that paper, and please engage us. We'll be happy to address your questions. Last but not least, I will thank you all, our audience, both those present physically, but also those present online, who had the patience of staying with us since this morning. Thank you for your presence. Thank you for your contribution. And I'll close here. I'll wish you a very good rest of the day. Thank you.